Hello YouTubers. I'd like to share with you and discuss a topic on building credit through my personal experience and the pros and cons of this specific strategy. First of all, what I recommend before applying this video is to go back and review on my series, how I improve my credit using a secured credit card to build your credit. But this is a good strategy as well. If you were a little impatient like I was, I was impatient at the time I was building my credit. But it's through what I did is I went in my bank in person and I asked for a personal loan. So I wanted pretty much the least amount, with me making payments about over a year. So ideally, and this is back then, they may have changed their policy, be like $1,000 or $2,000. So ideally it'd be nice to, $4,000 and find out their interest rate. And I don't think it actually goes on your credit score until you start making payments after 6 months, if I'm not mistaken. But to get the facts, talk to your banker. The banker should be able to give you the true facts on that, but I do believe I'm right. And it's been so long since I've done this. But yeah, the thing I don't like about this strategy is you have to pay. So your interest, and I'm not really into that, to build my credit to pay. But early in the game, that's what I did. So I admit, that's what I've done. And I've done some other things too through some other loans, and I really don't recommend them, so I'm probably not going to share those other than what I did through my bank. And the banker pretty much told me everything I need to know to build my credit, or a lot of it. Maybe I got lucky through the specific person that was helping. No, I think the bank, they want your business, so they'll try to help you out. But what I did is I got a personal loan, and it was over a year's time, and it was just auto paid. So basically I already knew. So let's just and I think it was $1,000. It may have been $2,000 or $3,000. I'd have to go back to my dorky notebook and find out for sure. But let's just say it's $1,000. So you pretty much divide that by 12 months with your interest, and that's what your payments are. And you may elect to put that in another account or put it in the same account. That'd be up to you. I just kept it simple and kept it in the same account. Going back in time though, what I wished I would have done to help supplement the interest I was paying is say, like, okay, they give me $1,000 and I turn around and say, great, now I'd like to put half of this, 500, into a CD, a 6-month CD, even though it's not a lot, just to kind of offset and just do it a little bit more intelligently. But at the time I was just in a hurry to build up credit, and I'm pretty sure it does work. Even though, like I said, I think the best way to build up your credit is through time, of paying your bills on time, being honorable, never going over 30% of your borrowing power. This is all stuff that I've talked about before in past videos, but this definitely speed it up if you take out a little personal loan. At this point too, actually, I hope you realize what you can afford, what you can't afford, and pretty much if you take out $1,000, make sure you have $1,000 to cover it on top of. You see what I'm saying? That you can afford this. Don't get in over your head. You don't want to get in trouble. That's why I was kind of hesitant to share this. But this is what I've done, and it did work for me. But just be responsible. I recommend. So enough harping on you on that. That's your business. I'm actually trying to help you out, but I can only do so much. The discipline's all on you. So yeah, it's pretty simple, no steps. After you got your credit card and secured it, and you applied that strategy, maybe this strategy would definitely complement and help speed the ball up a little bit more and build up your score faster. Of course, this has been so long since I've done this, but that's what I did. So yeah, secure your card and make your payments on time. You know, I keep saying the same thing over and over, but I can't stress it enough. Pay your bills on time. You know, don't go over 30% of your borrowing power before you apply the strategy. Then take out this loan. Make sure you have your whatever loan you took out. Let's say $1,000. Make sure you have it $1,000 in collateral. Learning from my lesson, if I could go back in time, maybe this is something that you would want to do. When you take out your loan, take half of it and put it in a 6-month CD to help offset the cost for your loan. You know, that would be a little bit more intelligent. You know, that's just an idea. But after a year, after actually 6 months, it should start to beef up your score. And once your loan's paid off, you know, your score, you know, I don't want to say for sure, but I have a good feeling your score should be improved greatly after doing this, you know, these two strategies, a secured credit card and taking out a loan. But, you know, actually that's really all you need is the credit card. You know, secure it, you know, worst case scenario, and over time you will build up your credit, you know. But this might help you out too, like before you buy a home and you're in a hurry to get your score up. Also, of course it's always good to have good credit, but talk to your banker and have them direct you towards their home mortgage department, and ask them if they have any first-time home buyer programs, you know, mortgage assistant programs or free classes they can give you. Sometimes they'll cut you a break if you have no credit, or if you're a first-time home buyer and you have bad credit. So I would talk to them as well if the purpose of this is to get into a home, and that's what the purpose was for me when I first started developing good credit. But I also knew too I could have gotten into my home sooner, but the credit probably helped me out as well too. So, having all said that, I wish you the best of luck, and you know, happiness and prosperity and building up your credit. I bid you a good day or good evening or however, and until next time, you take care. Bye bye.